6:30, so we're going to get started. Is the volume good today? Yes. Awesome. We struggled that other month, but I forgot to hook up the little antenna things. And don't tell my wife I'm eating some cookies today. Couple of housekeeping things real quick. Last month, somebody left a nice, let me get that turned down a little bit. Someone left a nice shirt. It is a 3X Falls Creek. There we go. It will be up here if that is you. Who filed their taxes on time? Is there anyone that wants to admit that they still haven't filed yet? A couple? Who had to write the IRS a big check? Yeah, a couple? We'll get a CPA in a couple months that can talk about depreciation and all the fun things that we can do to minimize our taxes. Well, welcome to Invest NWI, the premier investment group here in Northwest Indiana. The reason we started this group a couple of years ago was just to bring together investors of all different levels to provide an environment for relevant real estate education, as well as a place to grow the personal network. I've been in a bunch of different groups, and every group that I've gone to has always had a ton of value. I've made a lot of connections, met a bunch of people, and I've been in groups in different states. The one thing that always bothered me about some of the groups was they always brought in speakers that gave a good talk, but then they kind of left you hanging. And to get the meat and potatoes, you had to write the check for, $9.95. Typically, if you didn't do it that night, it'd be $2,000. But if you do it that night, it's $9.95. And that always frustrated me. I'm like, there's lots of people out here that can provide a lot of value and a lot of education that aren't going to charge. So I'm like, let's start a group in the area that is based around that. So we started this group back in January of 2015 in our office. We had 2017, we had 15 people at the first meeting, and I'm like, what are we getting into? This is crazy, we need a lot more people. But we've grown over the years, and the biggest reason why, and the feedback that we get, is people love being able to come, they like getting educated, they like the speakers and the topics that they present, but most importantly, they like that they're not getting pitched a big sales talk. So, a couple of benefits about being part of a group. Obviously, the biggest thing is networking with experienced investors. Just by show of hands, if you've connected with someone in the room and it's actually helped your business, raise your hand. I mean, there's people in the room that have done deals with people in the room. There's people in the room that, I've hired people in the room. As I look around, I see my insurance guy here. I see my lawn guy here. I see people that do contracting work for us here. And these are all people that I've met in the group. And I'm not alone. I mean, there's lots of you in here that have met different people in the group. Education. You can definitely get deals done. At the end of the meeting, we have an opportunity for people that do have deals to present the deals. I've sold deals in the group. I've bought deals from people in the group. I've lent money to people in the group. I've borrowed money from people in the group. So definitely a ton of value there. Disclaimer, the material and content presented today is for educational purposes only. It's not legal advice. Don't take it that way. A lot of our speakers are sharing from their own personal experiences and things that they've gone through. You should definitely consult with your professional network before engaging in any of these activities. This is investing. Just like any type of investing, there is risk. There's always a chance that you can lose some money on that. I always share people. People come to me all the time. Someone asked me tonight about a program. Hey, what do you think of this program? What do you think of this speaker? What do you think of that? And I always tell them, do your own due diligence, vet the program, go online, read the reviews, speak with the people in your professional circle, your CPA, your attorney, your mom, and just understand that investments have risk. And a lot of it, the reason that people are successful at it is because of a lot of hard work, a lot of tenacity, dealing with the ups and downs. It's not easy. It's not like the TV shows where they're like, oh, I bought this house for 50 grand, I sold it for 150, and in 2 weeks I made 100. That's not common. So, a who did something this month? I got the, other than pay your taxes, any good news? Grab the mic. Here you go, John. Can you catch it?
No, don't do it. Don't do it.
No?
Don't.
You got it. Who was excited about Tiger Woods yesterday? Woo! Is that pretty cool?
I did a private money loan in the last month. Went out the last of the money in my IRA, which I'm very happy to have in play.
So I shouldn't contact you for a loan?
Exactly.
I closed my first wholesale deal.
There you go.
Congratulations.
That's pretty
What was that, maybe 90 days?
Maybe like what, 3-4 months ago?
Yeah,
that you
like
guys started on it?
Yeah,
for sure.
I started in December.
There you go.
I'm Craig, and I officially closed my first flip deal this afternoon.
Congratulations.
Is that the one in Maryville?
Lake Station.
Lake Station? Okay. Do you have one in Maryville?
Do not.
Okay.
Oh, here we go.
I was doing some return mail yesterday and I saw that you had bought a house, so it must have been the Lake Station one.
Close the wholesale deal Thursday.
There you go. All right. Anyone else do something fun?
Yeah, but we can't talk about it.
No? All right. Couple of tips and tools. If you're not on Facebook, then you can ignore this, but if you are on Facebook, you definitely want to go find our group page. It's Invest NWI. This page has a ton of information. We're always highlighting our upcoming speakers. Great place to ask some questions. Here are just a handful of questions that people asked this month. Sasso asked about what software is recommended for managing rentals, less than 10 units. Kevin out has an investor that we went him on a couple of deals where he was looking for $80,000 for a Hobart flip. Justin posted this a letter from Mayor McDermott about him as being on Airbnbs, and that produced some interesting conversations. A lot of people are asking for contractors who does epoxy floors. I need a licensed contractor, electrician, plumber. So we get probably 2 or 3 posts a day in the group. So if you're not on there, it's Invest NWI Investor Group. It is a private group, so we do have to approve you just because we don't want all the out-of-state people that are selling their junk to be in the group. And I do kick those people out all the time. But that's definitely a great tool for you to be in there. Real quick on the membership, if you're not interested in that and you want to come back, it's just $15 a month. That helps cover the cost of the room. This room is about $900 a night, and then the food and all the other stuff we do. If you don't want to pay the $15 a month, we do have a bargain. It's $120 for an individual, $160 for a couple. It gets you into 12 meetings in the year. Our new website, which I forgot to load up, just started today. The last website we had, I apologize if it wasn't what we expected it to be. It had tons of issues, so we switched to a brand new provider. It's going to make signing up online a whole lot easier. It's going to make getting access to it and resetting your password and all the stuff you had issues with a whole lot easier. So that's up and running. We're in the process of getting all of the members logged on to that. So bear with us with that. But you have access to that on the website. We've recorded all of the meetings that we have going back to the middle of 2017. So they're all available in the members section there. So even if you just sign up today, you literally have over 2 years of meetings available for you there. We have our affiliate program with Think Realty where you can get discounts at a bunch of local providers. You also get the magazine, a gift box, and we just added it. Hi everybody on Facebook. If you are a member, we have a private Facebook group page, and members that can't make it tonight, we have a lot of out-of-state members as well. They're watching this live on Facebook, so hopefully that is working well. So if you are interested in that, you can always grab more game at the back at the end of the meeting and get some more information on that. Hey John, can you bring up the raffles? We're going to give away 2 raffles today. We have a book by Michael Blank. Anyone listening to his podcast? He's a multifamily apartment guy, does single families as well. The book is Financial Freedom with Real Estate Investing. everybody should have a raffle ticket, and then we're going to give away one of our shirts. We are in the process, we'll have them by next month. We're going to get short sleeve shirts because hopefully the weather is warming up and it will be ready for short sleeve season. If you do want to buy, someone asked us last month about buying clothing, we will make those available as well. Boom, boom, boom. All right, the first one, I'm just going to do the last for 6786. This is for the book. 6786. Everyone pull up their raffle, look at your last four. You did give these to people, right?
Oh, we did.
Okay. 6786. No, no, no. 6792.
Right there.
There you go. And then this is for a shirt, 6844. 6844. No? They just don't want the shirt. Let's see here, 6777. Next month I'm gonna get those cannons that they use at the ball games and just start like chucking shirts. No? All right, I'm not waiting around for y'all. 6827. 68, there we go, Nick. All right, we got a bunch of shirts over there, get them on that fits. So next month, to qualify for a raffle, and we're gonna change this up a little bit. Next month to qualify, you need to bring a guest. So bring a guest, you get a raffle ticket for everybody for each guest that you bring, you will get tickets. So if you bring 5 people, you get 5 tickets. If you don't bring anybody, how many tickets do you get? 0. 0. And I'm going to give away something really cool next month. Plus our topic next month is going to be awesome as well. Hey Valerie, come on up. John, where'd that mic go? Okay, I'll use this one up here. All right, I have the pleasure of having Miss Valerie chat today. Oh, let me do this. Yep, I'll do this. So you click here. This is why Macs are way better than PCs. Who's a Mac fan? About a third. PC? Nah. You're all just Dutch and don't want to spend the money on good equipment. Oh, that's why I couldn't touch it. All right, here you go. Do you need to do that?
I do. I want to read my notes.
So Valerie, I met Valerie after, I don't know what to do, sorry.
It's fine.
So I met Valerie back in the fall, and then in January she approached us about being a project manager for us. I'm like, yeah, we do a lot of flips, it's a pain in the butt. Let me give that task away to someone else. You just broke everything. So she started working with us in January, February-ish, and I don't know, she's done 4 or 5 flips for us. For this is one that's very unique, and she's going to walk you through some of the things we learned there. That proceeds to the next slide. So a lot of lessons in this flip here.
How's everyone doing?
Awesome.
Did anyone have to file an extension? Raise your hands. Did anyone ask Bell to file an extension for them? No?
Had to do an amendment though.
An amendment, that's fine. Well, as Adrian was saying, my name is Valerie. I've been doing some design and project management work for Region just this past quarter, and just wanted to walk you through this rather interesting finishes on hold because she was nervous about the finishes. She didn't like the direction that we were going in, and it was obvious that it was now my job to kind of understand a little bit better what she was looking for, so she would be ultimately happy with the property that we were selling her. She also really expressed the want for the siding to be completed on her property, which also wasn't an original scope in what we discussed with Justin. But again, we tried our best to calm her and help her understand that if there was room in the budget, we would get that done for her. So what could go wrong?
Okay.
Well, for starters, mold. We tore down the existing popcorn ceiling of the property and right down the center of the ridge line and across basically half of the entire property was just rife with mold. It was in the sheathing, it was in the trusses, and even in the garage. And it was about a $1,300 expense that we weren't anticipating. And additionally, once the snow began to melt, that was around the property. Once we initially viewed it, it became rather obvious that the existing aluminum siding wasn't going to work. We were going to have to replace it with a vinyl solution. So here are some progress photos. You'll see the look-through that we constructed in between the kitchen and the family room. There is some framing of the bath, the master bedroom, getting a little bit closer in finishing the bathroom, and finally exterior vinyl siding work and aluminum wrap around the windows. Here's some completed project photos. We're really proud of the way this one turned out. I think we're gonna copy this scheme again. She was very adamant about matching her existing furniture that she had. So like I mentioned, the original approved color scheme that we were using just wasn't gonna work with the furnishings that she had, and she didn't have money to purchase any new ones. So, what we did here was finish the entire floor with luxury vinyl plank, life-proof, which, as you guys can know, can be rather costly. We finished the bathroom with farmhouse finishes. We did the bifold closet door, and also some farmhouse finishes like the lighting and this wood hexagon tile that I thought worked out really well for that theme. So Adrian talked about the meat and the potatoes. Here is the meat and the potatoes. Like I mentioned, the budget was originally $25,000, and we actually ended up spending $33 grand. That's a big bust for me. I don't hope to do that again working for Adrian and Justin. But as you can see, base contract with our GC there. Also replaced the HVAC unit to a new unit, also a new AC unit as well. Mold remediation came in at $1,300. Vinyl siding was a big chunk of the budget that, well, we didn't originally commit to doing, but because it needed it and we wanted to really deliver a product that we could be proud of, we went ahead and did it. Rough-in, building, finished materials, all from Home Depot, came in just over 10 grand. And we did order a new 4-piece stainless steel appliance suite, air duct cleaning, overhead door repair, and some final punch list work that we got done. While the mold remediation and the vinyl siding install wasn't a huge account of our bust, I would say having to work with a client shooting for 30 days, start to finish, and I will address that in the next slide. We ended up taking 17 calendar days on this project. It was important that the buyer got in that property as soon as possible. Like I mentioned, she had gone through some distress herself, so she was essentially displaced. So it was really important that we crushed the schedule, and shout out to Mike Andretti, MA Development Group. Thank you for your hard work. The guys just kicked ass. We worked together as a team and we got her done. There were other contractors on the project, like I mentioned, HVAC work, siding, window wrapping, improving the overhead door, mold remediation, et cetera, et cetera. So it was really important that we took into account everybody's sequence and was able to schedule everybody basically as soon as one contractor's done, the next guy's going in. So that's how we managed to do it. Any other questions about the budget or timeline? Yes.
Did you have to pull any permits or anything?
We didn't on this one because no significant structural work was done. We didn't move any walls, we didn't move any plumbing, didn't move any electrical work, so we did not.
Didn't y'all do the HVAC though?
Pardon me?
I thought y'all did the HVAC.
We did, but it was just improving the unit.
Oh, okay.
So all we did was bring in a new unit. We took the AC unit and the HVAC unit out and replaced them with new. So again, there was no reorganization of any venting or anything like that. So as you can see, we purchased at $87,000. Rehab was $33,500, which is $8,500 over budget, and we sold for $140,000, which was a $15,000 profit after overhead and things like that. The scope of work included vinyl siding, brake metal wrap, furnace, AC, complete bathroom gut, new LVP, carpeting throughout, case and trim, electrical, plumbing upgrade with all new fixtures. We started on March 6th and we completed on March 22nd. Thank you, Mike Andretti. All family heating and cooling, Wesley Roberts, and exteriors by Edgar. And finally, lessons learned. So while creative exit strategies can be rewarded, strongly consider the opportunity cost when dealing with a buyer who suddenly becomes a client. This decision made the front end of the project, this decision made on the front end of the project affected the budget and finished schedule greatly. Like I mentioned originally, a lot of changes happened right at the beginning. We could have been done even sooner had we hadn't been dealing with the nervous buyer. And also while assessing the property for repairs originally, there was about 2 feet of snow on the ground. So be sure to add line items in the budget or contingencies as they're called for unexpected repairs. In this case, it was mold remediation, project this size, exterior work, bathroom gut, new drywall, doors, floors. You should always have at least a 10% contract value contingency sitting there in the event of those issues. And when given the opportunity, I think the biggest lesson learned here to help your fellow human pre-selling this property to an industry contact, a friend, an acquaintance, not only strengthened a relationship, but it really helped somebody out after a rather unfortunate series of events. So when you get the opportunity, help someone out. Thank you very much, everyone.
To give you some additional context, the person that we sold the house to worked for the title company, so she sees all the houses that we buy, and we knew that she was looking for a particular house in Valparaiso, and we just happened to put this house under contract. She asked us about it, so it worked out well. There's definitely some advantages to selling off market like that. It was fast. She started the whole lending process while we were still in the midst of the rehab. So as soon as the rehab was done, the appraiser went in, finalized the numbers, and we closed really, really quick. So we saved probably 5 to 6 weeks, if not longer, with it sitting on the market, waiting for a buyer, the inspection. She didn't do an inspection, the appraisal, and the whole closing process there. So 6 weeks of holding costs, taxes, insurance, utilities, private lending money. We saved all that. We did give her a little bit of a discount off the purchase price, not because we're really, really generous, but because we were basically at the top of what she qualified for. But again, it was a win-win. It worked out for her, it worked out for us. So that was a fun experience. I'm not quite sure how often I would have a buyer already in mind, because they definitely had some challenges when the buyer was going there every single day almost to inspect the work and give her 2 cents, which even at closing, she showed me some pictures. Hey, can you tidy up this and tidy up that? And I'm like, look, we've already spent $1 billion over budget. So, but thanks for doing that. You did fantastic. If you've done a project, whether it's a flip or a rental rehab or a private loan, and you want to share your experience with the group, definitely reach out to us. We would appreciate your feedback on that. Ralph, are you in the room?
I am.
Good. Come on up.
All right.
All right. There you go. So I met Ralph about a year ago, and I'm going to walk over here so we don't interfere with each other. And I gave him our insurance, and I used to sell insurance, and I'm talking to Ralph, and there's so many terms in there, replacement costs and cash value and this and that. I'm like, man, for someone who has insurance experience, this stuff's confusing. And I know I've talked to a lot of folks that are like, just give me the cheapest insurance possible, because all I care about is saving as much as I can on the front end. But then if something bad happens, they don't have enough coverage anyway. Is that you or me? No idea.
Turn away from each other. We love you, but.
I'll turn him down. Whoa. All right, try that again. Are you on now? Test it. There you go. See, I'm not a tech guy. But anyhow, he's going to walk us through the ABCs of insurance, kind of help us understand some of the different options that we have, talk a little bit about renter's insurance. So take some notes, this will be good.
Before we get started, I also want to give a plug to Mr. Mike Andrade at NA Development. Mike has really helped me with a number of my clients that needed to do some rehabs on their homes. And when you give Mike a call, he's on top of things, and he's very competitive with his pricing, and his guys do unbelievable work, and they've actually worked in my own home. So if you ever need a service like that, keep him in mind. Again, my name is Ralph Flores, Jr. Here to talk to you about insurance. I know it's not an exciting topic, but I believe it's an important topic. You're investing your hard-earned money in these properties, and I know you want to make sure that you're properly insured and that you're securing your investments. Prior to getting into the ABCs of insurance, you got to fill about 40 minutes, so there's not much. There's not a lot of insurance that I can get into. So I'm just going to give you some background on myself and how I wound up in the field of insurance. Presently, I reside in the town of Munster, married, 2 children, grew up in East Chicago, Indiana. Went off to college, but they called shoot that. And then they said, we bought 85 properties at the last tax sale months ago. I said, really? I said, who's gonna insure them? They said, oh, well, we don't own them yet. They're still in the redemption period. I said, okay. And I said, well, when does the redemption period end? They said, oh, in a couple months. I said, oh, would you guys give me an opportunity to possibly insure them? They said, absolutely. So I left that lunch meeting, I went straight to my office, and I just started studying, just figuring out how the heck am I going to be able to insure all these properties if, now that I'm getting the chance. So I did a lot of studying. Redemption period came and went. They wound up with 65 properties. So they put those 65 properties on my desk, and I went to work. It was a blessing to have. My very first client gave me that many properties to work on because they had some very nice properties that as soon as they picked them up, they had tenants in them, and they were producing revenue. They had some properties that needed a little touch up, so we had some renovation properties. Then we had some dogs, and they were basically vacant properties that they didn't know what they were going to do with, but eventually they were going to build a plan around those particular properties. So we wound up doing that, and I really got a lot of experience with them. And to this date, I still insure 45 of those properties. About 15 of them have sold. 4 or 5 were purchased by the city for future commercial development. And then unfortunately, a couple of years back, they had a series of losses. They had a loss at one home. It was a total loss. It was a fire. 2-3 months later, they had another loss. Total loss, fire. 2-4 months later, a car drives right through one of their properties. Major loss. Then 2 or 3 months after that, another fire. But it wasn't a total loss, it was just a partial loss. So within an 18-month period, they had 4 significant losses. So now renewal time is coming up, and I go to the company that's insuring them and submit my applications for renewal. They said, no way, too many losses. So I go, I'm a broker. I've got all these different companies that I'm going to, reach out to, and reached out to one company, 2 companies, 3 companies, 4 or 5 different companies, all rejected, would not write the policy because of the loss history. So I come to find out, because I had never been in that situation before, that when you are in that situation, there's one option you have, and then you have to get insured by the state. It's called the Indiana Fair Plan. And when you have to go to the Indiana Fair Plan, the state knows they have you over a barrel. So those rates are not pretty. So so there was a couple of lessons that came from this particular story with these guys. One is, if I would ask them what was probably the biggest mistake they ever made in their business life, I would think that purchasing those 65 properties would be it. Not because what you guys do is a bad thing, it's a good thing. Real estate, purchasing real estate is a good thing. But for them, it wasn't the right thing. Their business was continued after that 5-year span. First 5 years just continued to escalate. And they were multimillionaires. They didn't know that was going to happen, but that's what happened. And they basically purchased these properties. They threw some money and thought that was going to make everything right. Just throw some money at it, it'll be okay. But as many of you know, you seasoned investors, it takes a lot more than money to be successful in this industry. It's a lot of hard work every day, being on top of it, a lot of research, making connections, and to be successful. And they had absolutely no time or desire to do that. So just a little story about how I got started working with real estate investors. property. It's called property valuation. And there's three different terms that they use. One is replacement cost value. And that is what you would pay for your property at today's cost. And then you have actual cash value, which is what you would pay for the property at replacement cost minus depreciation. So typically, the property is depreciated by the value or wear and tear or the age of the property. I'll give you an example. We have a frame dwelling in Hammond, Indiana, built in 1950. And it's 1,000 square feet. Most insurance companies will allow you to depreciate your properties up to 50%, 1% per year. So in this particular example, replacement cost for this property, so is $100,000 at today's cost, using a construction cost of $100 per square, which is labor and materials. So it's 100,000 square foot, $100 per square equals your $100,000 of replacement cost for this particular property. In this example, if anybody can give me an answer, what would actual cash value be for this property in this example, considering that the property was built in 1950 and you can depreciate up to 50% depending on the age of the property? Does anybody?
50,000. 50,000.
50,000, so pretty simple stuff. So now the third type of value is what they call agreed value. And that is a property value that you and your insurer agree upon at the beginning of your policy period. If a loss occurs, your property will be assessed based on your agreed upon value. The co-insurance clause in your policy is suspended when the value is agreed upon, and the insurer will not consider co-insurance when calculating the loss. Well, the next logical question would be, what is co-insurance? The co-insurance clause purpose is to encourage property owners to buy an adequate amount of insurance. If a loss occurs, the clause penalizes policyholders who have underinsured their property by forcing them to become co-insured. This means that the policyholder must pay a portion of the loss themselves. And if co-insurance applies to your property, usually there's a percentage attached to it, such as 80%. The percentage represents the amount of insurance you must maintain. This amount is expressed as a percentage of the value of your insured property. So let's take the same example. We have a home in Hammond, Indiana, built in 1950 and 1,000 square feet. And we're going to insure that home this time at replacement cost. If you have an 80% co-insurance within your plan, then you must insure that property at $80,000 to avoid any penalties if you had a complete loss at the property. Okay. Now, suppose that you just purchased the same home, and it includes again an 80% co-insurance policy, but this time you purchased, you actually insured the property at actual cash value. What would be the co-insurance amount that you would have to insure that property with?
40,000.
40,000. Okay. So it's not that difficult. It seems when you're reading through these things that it's more difficult than it actually is. Any questions?
Yeah, if that $100,000 house burns to the ground and is the complete loss, how much are you paying me?
How much am I paying you?
Yeah.
Well, I'm going to pay, it all depends. You insured at replacement cost for $100,000?
Yep.
Okay. And you would get paid the $100,000 minus your deductible. Okay.
What kind of savings is it if you go with the other options? Are you saving a substantial amount?
You are saving money if you go actual cash value versus, and oftentimes, ensure that we cover that at replacement cost. I have other clients that will purchase homes, say, in some areas in Gary, Chicago, and Hammond are struggling a bit, and they may pay $15,000 for that particular property. We're not going to insure that property at replacement cost value, because sometimes those properties are 3,000 to 4,000 square foot homes, and you're buying them for 15, 20 grand. To insure that at replacement cost, you'd be insuring up for $400,000, and it just doesn't make any financial sense to do so. So every situation is different. It all depends on the type of structure that you're purchasing and how much money you're putting into the property.
How do you do the insurance for during the rehab process? Do you do it for ARV, or do you do it for the value prior to rehab?
Well, we actually.
Hey, Ralph, can you repeat the question so they can hear it, because they can't get to the mic?
Go ahead. Well, he's asking how do you insure rehab. Basically what we do is I give the insurance company the stated value of the property as it is today, and what you're putting in. If you're putting 20 or 30,000 into the property, both those limits will be stated, and it'll be outlined in your policy.
So would it run at a like a tier level? Like if the rehab is estimated at 3 months and purchase is at 80,
Yep.
ARV's at 140, it would increase by
Absolutely.
25,000
Exactly,
per month
per
on
month.
that?
Exactly.
That $100, is that regional? That can't be across the board, is it?
Oh, no, the $100 on.
The square.
No, the square, that's the one I use. Some companies, their replacement cost estimators are 95, others might be 110, 115, but I typically just use 100,000. It's kind of right in the middle. Okay, we'll go on to coverage forms. There are 3 different sets of perils that you can insure your property against. They're typically referred as coverage forms. You have your basic form, your broad form, and your special form. And each of these forms get progressively more expensive because they're covering more perils. So the basic form covers your fire, lightning, explosion, smoke, windstorm. They're all listed there. Your broad form covers all of your basic form, but it also covers falling objects, weight of snow, ice, sleet, and water damage. Not floods, but water damage. So if you have a water heater that's leaking or something like that causes some damage, then you have some coverage. But it's not, when you say water, it's not a flood. That's a whole nother segment that I'm definitely not going to be getting into today, is flood insurance coverage. And the final one is the special form, and that's the best form. Basically, you're covered for all perils outside of what is specifically excluded in the policy. It'll state right in the policy what's excluded. But typically, you're going to find earthquake, natural hazards, war, and floods as the specifically excluded forms that they're not going to cover. But outside of that, they'll cover anything as it pertains to a loss. And again, that goes back to the question that you posed. If someone's rehabbing a pretty nice home in, say, Cherville, and they got a couple $100,000 into it, and they're going to put another 40, 50, 60 grand in it. Typically, we're going to be insuring it at special form and at replacement cost. So, any questions on coverage forms? Okay, now we're going to go into renter's insurance. How many folks here have tenants? Okay. Do all of you require and put into your contracts that they obtain renter's insurance? Yes? No? Yes. Okay, we got some yeses and some no's. Well, I would suggest that you put that into your policies. And I tell all my clients to make sure, that's my suggestion to you, is to inform your tenants to purchase paycheck to paycheck, and and for them to have that type of loss, it's tough to deal with, even as, you know, as they're the owner of the building, when you see that, you know, now that they have a serious issue on their hands, and there's really nothing you can do about it unless they have renter's insurance. So I would suggest that you do that. Another thing that I've seen, is there anybody here that has a tenant that also has is purchasing that property on a land contract? Yeah, okay. Do you allow them to purchase your own insurance for that particular property, or do you insure it?
I allowed them.
You allow them? Okay. Are you listed as a loss payee and additional insured in that policy?
Yes.
Okay, great. Yeah, I've seen that where owners will allow them to purchase their own homeowner's policy, and then they will not require them or to put in a contract for them to be loss payee and additional insured. If there's a loss, the insurance company is going to see whose name is on that policy, and that's where they're cutting the check. So if you're not listed as a loss payee and additional insured, it's going to take you some work to get some of that money if those people don't cooperate with you, and you're going to have to get an attorney, and you know, so you're going to have to pay money to get your money. So just a word of advice: if you do that, I had a brand new client that just came in on Friday, and they were going to insure their first property with us, and I asked them, I said, do you have any other properties? He said, yeah, we have one other, but we didn't come to you because we have it on a land contract and they have their own insurance. And I asked them the same question. I said, are you listed as a loss payee and additional insured? They're like, we don't even know what that is. I'm like, well, you're going to get, you know, an education here, because it's very important that you do that. And so they went right away and spoke to from what I understand, spoke to their tenant, and hopefully they work that out. Any other questions on renter's insurance? The last slide that I have is basically, we have various companies that we work with, and there's a couple of different programs that we run at Flores Insurance Group, and the one that I'm going to highlight is called the NWI Scheduled Dwelling Program. It's for residential property owners, investors, renovators. And this particular program is geared for those investors that have 10 units or more. But you can get started in this particular program if you have 2 or 3 properties, with the intent over the next couple of years to reach in at 10. I just speak, you know, I'll talk to the underwriter and let them know that their intent is to continue to add properties to the portfolio, and then eventually they'll be at 10 in a short period of time, over a couple of years or so. Also, what's good about this is you can have 1 to 6 units on this particular program. Most companies aren't going to are not going to stop at 4 units. So in this particular program, you can go 1 to 6 family units with this program. It's a 12-month term, and the protection classes go all the way from 1 to 10. So if you have homes in rural areas, and you have nearest volunteer fire station is 5 miles away, you can still get insured for you. In this program, they offer the basic, broad, and special forms, which we went over earlier. And there's no maximum about this, it's called reporting form. So you have everything is on one policy, and you get an Excel spreadsheet, and you get one monthly bill for every property that you own. It itemizes each property, the coverage, and that month's premium for that particular property. It also has the co-insurance we talked about earlier, and 3 different types of valuations of actual cash value, replacement cost, and agreed value. It's a great program. It keeps everything in one nice, neat little policy.
So then does this set it up almost like a blanket coverage? So let's say you've got like 4 or 5 properties.
Mhm.
You just want to assign an aggregate total for all of those properties for what the replacement cost might be.
Right.
Is that how it's set up?
It's similar to that, but each property has their own dedicated.
Okay, so it's
limit.
almost like scheduled.
Yeah,
Okay.
it's a schedule, exactly.
Okay.
So each one can be different. You could have some at the actual cash value and some at a.
Absolutely, great point.
Okay, so I got another question. What happens, heaven forbid, you have like a loss, like a
Mhm.
complete loss in one of them. If you had separate insurance, how would it be affected differently than if you have like coverage like this? Or if you had those people had 4 losses in
Mhm.
18 months?
Right.
Am I gonna get all my buildings dropped then from this plan? You know?
Well, it is all in one plan, and it's to stay insured, so you run the risk of that happening.
But the other way, like, okay, so say I have it the other way where it's all separate plans.
Mhm.
You know, what's the chance of like the insurance company, like that I have, this house, nothing ever happened to it.
Yep.
But they know I have 4 houses that something happened to. Could that insurance be affected?
It could. Yes, yeah.
So I run that risk either
Yeah,
way.
and it doesn't happen very often. I've had insureds that had a couple claims, and I've had absolutely no problem. This is the only time that I've ever had that issue was that 4 claims in that short period of time. It was doesn't happen very often, but it does.
Yeah, we
Did it really?
Yeah. And then, we just got dropped, and then trying to get it again was ridiculous.
It is.
I almost had to go get that state stuff.
Yep, exactly.
I didn't, but-
Right. Sometimes
Why do I have insurance if I can go?
Yeah, and break up, create other additional LLCs and things of that nature that you're not good at. Your history.
Thank you.
Yep. Well, any other questions?
So then is there one total deductible for any given location, or is it based like on a per occurrence, or is it like a total aggregate
You
for the
can
year?
have separate deductibles for $2,500 deductible
Okay.
for one property and $1,000 on another.
Okay.
And there's a cost savings in doing it this way as opposed to separate policies? Or is it just more convenient, would you say?
I would say there's some savings. These rates are very competitive, but the convenience is definitely the biggest plus. But I've put this up against other carriers, and they're very competitive. So.
If my properties are independently held by separate trusts, can I still wrap them into this type of policy, or do they have to go into independence?
So I would. So, yeah, so they're all
But
separate.
if it falls under one
They're
LLC,
separate
is
trucks.
like-
Yeah, so we would have to have separate
Major.
policies for that, yeah.
Okay, same question for a series LLC. Would you need separate policies there? Each property's in a separate series for that LLC?
No, under the.
You got an umbrella.
Okay, so that, it would work. So for
That
a
would
series
work.
LLC, it'll work, but for separate trusts, it won't.
It won't.
Okay.
Well, and I know that series thing is brand new, and I know when I was looking at starting one, like, they don't even know.
Yeah,
Josh
that's-
didn't even know, like, what was gonna be coming of it,
Yeah.
so I don't, it might be, maybe insurance too, you might be able to, you might not.
Yeah.
Ralph, let's say someone has 100+ properties. They're thinking, well, shoot, instead of paying you $100,000 a year in insurance premiums, I just self-insure myself.
Okay.
What's the pros and cons of doing that?
Well, I'll be honest with you, I haven't come across that in my tenure as
some folks that have tried to do that with 20 properties, and I'm like, you're only saving 18 to 20 grand a year. At that point, it doesn't really cover a loss, but if you got to a certain number of houses, it might make sense. But here's one of my favorite parts of the meeting is let's talk about who has deals. John, do you have the mic?
Got the mic.
There we go.
Let's test it.
Who has something? I know Val has like 3 houses that she's about to finish up, and there's only one in her pipeline that she's gonna be rehabbing, so I know Val's looking for deals. Does anyone have anything?
Come on, y'all. I know y'all got some deals.
Somebody's gotta have something.
Come on, let's bring it.
Got a lot of deals.
Okay. Let's
Tell us what they are.
Let's expand.
Just give me the top. Give me the top 2.
Michigan City, 7 acres, a house on it, got a turnkey, house in the back. Yeah, rent it out.
Okay. How much?
He hasn't decided yet.
Anybody else got deals? We got Michigan City. I've got one in Gary, 3994 Ohio Street, 3-bedroom, 1 bath, on a corner, 2-car garage, sitting on a slab. Beautiful canary yellow. There's some pictures of it over here in black and white. That's why I said canary yellow, so you all can use your imaginations. Well-maintained property, great cash flow opportunity. Rents anywhere between $825, $850 a month on a property like that. The previous owner took care of the property pretty well. So you're looking at paint, some flooring, the mechanicals are tight. They upgraded the electric. You can see I'm selling it. If you have any questions or want to see the property, come and see me. Or hit me up at 219-777, write this down, 0896, that's 219-777-0896. So great cash flow opportunity, or if you're looking for a little starter home in Gary.
Who are the wholesalers in here?
24,950. Good question. You're paying attention.
Where are the wholesalers?
Oh, here we go.
We only have 2 tonight.
Al Perez, Preferred Homes. I have a property in South Hammond, 3-1 on a slab, and needs siding, windows. Roof is 50/50, 59,000.
Where in South Hammond?
I gotta check. It's like 7751 something.
Like, right by the expressway. Do you know what zip code? Hessville or?
It's Hessville. It's in
Okay.
Hessville. There's no garage, so no garage.
Anyone else have anything? Need money, have money, over here? Everybody.
Need money.
There's a lot of money available. Deals, we all need deals.
I got a house in Sherrville that I could wholesale out if anybody's interested. Let it go for $210. ARV is about $275 to $285 on that one. Needs pretty much everything: interior, kitchens, bathrooms, the whole 9 yards, but money's there.
Anybody got any other properties or money? I've got about 80,000 to put to work. So if you all have some interesting opportunities, please come see me.
I had taxes to pay.
No, we don't do the tax. That's a rabbit hole right there.
I'm sure there's some lending opportunities there. Anyone else have anything? Once, twice, moving on. All right, so next month is...
Oh, Highland.
What?
Highland.
Ohio?
Highland.
Highland. You have a Highland deal?
Justin, you want to talk about the Highland deal? I am. 4-bed, 2-bath Highland. 27 what? 2736 81st Street. Exactly.
We have a Highland one coming up, 4-bed, 2-bath. Al, are you listening?
the floor of the bathroom. So if you don't mind, come check it out with John. He'll have more details. See him after the meeting tonight, so that you can get a first look on Friday. Resell.
There we go. Awesome. So next month, I'm really excited for this speaker. Great speaker next month. Who gets frustrated fighting over all the MLS deals? Or I wouldn't even say deals. So I went to a house. Bill brought it to my attention. We went on Saturday in Hammond on 171st Place. Did anyone else look at that one? It was listed at 65,000 or something like that. We went. It was like a nonstop open house all day. I talked with the agent today. He had 16 offers. I offered 7,000 over asking, and he said I wasn't even close. And I wasn't even trying to flip it. I was just looking for another cheap rental.
Where was it at?
I'm sorry?
Where was it at?
It was the one on 171st Place, like 1327 or something like that, right behind Fire Station number 7, by the Hammond Housing Authority place. I don't know where it sold for. If I was the agent, I would have listed it at like 90 grand. That's honestly where it probably should have been listed at. But I mean, again, there were 16 offers on the house. It went multiple offers. It was listed Friday. But that's kind of how it's been on the MLS. In the last 3.5 years, I've purchased over 250 properties. And I can probably count on one hand, I think just 2 fingers, how many properties I bought off the MLS. The majority of what I buy is off market. My biggest deals, well, because everything I buy is off market, but I'm buying stuff at stupid low prices off market. I bought a 5-unit in Hammond. They're going to make me convert it to a 4-unit, but I paid $45,000 for it. So who would like to buy a 4-unit in Hammond that's fully occupied, bringing in $2,800 a month for $45,000? Now I got to upgrade knob and tube and do a whole bunch of other silly things the city's requiring me to do, but that's still a phenomenal deal. I bought, the week before that, I bought a brick 2-unit in East Chicago. The roof, the windows, the back porch, the furnace, and the water heater all updated in the last 5 years, 3 to 5 years. The guy who did the clean out for it offered me $55,000 for the property as is before he did a 2 dumpster clean out. I picked that property up for $14,000 off market, and the seller kept asking me multiple times, that price doesn't work for you, we could go lower. He said that like a dozen times. I'm like, no, we're good here. That's kind of what we're able to find off market. So does that sound exciting?
Yes.
Now, there's a ton of work to that. There's cheap ways that it can be done, and there's expensive ways that it can be done. We're going to talk about for folks that have a very small budget, and we're going to start. When I started this, I had no money. I literally had to scrape money together just to send out my first mailers. So we're going to talk about what I did and what you can do on a very, very small budget to try to find off-market deals. Obviously, the market's different. It's not as easy as it was when I started in 2015. But there are deals still out there. There are people that send me deals all the time that are just getting started and they have no budget. So there's ways that you can do that. We'll talk about that. And then there's the extreme things that are $400, $500, $600 per lead that we're going to talk about when it comes to like internet marketing for people with big budgets. We're going to talk about everything in between, the pros and cons of each one, what works, what doesn't work. I have some really interesting audio clips of people that have called in and because not everybody likes to get the mail that we send. So I have some really funny clips that I'll share with you guys. It will be R-rated. There are some folks that call in and do say some bad words. But it'll be fun. But if you are looking to get into finding off-market deals, you definitely want to come next month. If you have deals to sell, there's plenty of people in the room that are looking for deals, so go work hard in the next 30 days so you can bring those deals next month. We're going to have a really cool raffle next month as well. So if you bring a guest, you will get a ticket for that. So thank you for coming tonight. We have the room till about 9:30. So definitely network with the folks that are here. If you are a member, we'll have the new video from tonight up on the website. Give us about a week for that since it is a new website. If you're not a member and want to get more information, catch Morgan in the back for that. So thanks for coming, and we'll see you next month.
That's our number one
sick
job.
for a month. As soon as she went to daycare, one day she came back and she had sniffles.
Danny was in the hospital.
Are you serious?
Oh yeah, what do you about like 6 months? Yeah, 6 months. No.
Yeah.
It's terrible for a while, but then it gets better.
Yeah.
It gets better. Yeah, the sickness is sick.
Yeah, he pretty much has had a runny nose for
A year.
80 to 90% of his life.
A year.
It's just nonstop.
Yeah.
Every kid you go in there, you're like, oh, these kids.
Every one of them. Yeah. They're all putting the same thing in their mouths.
Yeah.
So wait, I have to ask you this. Are you guys bulb users or are you the nose Frida people?
I like nose free.
Okay. I thought I'd
I
never
only
use
did the
it.
bulb.
I swear by that right now. Oh my god.
Well, I love the bulb when he was itty bitty.
It's so gross.
I love the nose free bulb when he was itty bitty.